Now people may say, oh, NAV is like too much of a micro goal in life. But the reality is that you must have some clear outcomes in mind. And in our business, I have India's longest track record as a public markets fund manager out of 1 point whatever billion people we have. In the US, if you beat the market by 0.5%, 1%, will do it for a long time, you're a hero. My goal is somehow I have to beat this index by 1-2%, because one thing I have learned is...
What do you think about? So many people are building cash positions also because they think that India is very, very expensive.
So according to me, 20% cash has one philosophical problem.
AI and robo-advisory, do you think the markets will change in terms of performance that fund managers can deliver?
Yes.
Welcome, Samir, to the India Opportunity Show. How are you doing today?
Very good. Thank you. Excited to be here.
Amazing. Thank you for agreeing to come on this. I know it was a very unconventional way to get you through Twitter, but I love that it worked.
Actually, I like everything about Twitter, including the owner, Mr. Musk.
Yeah, we will talk about him also. But any thoughts around that with the big turnaround that he's done with Twitter just before we jump into everything?
No, I'm his total fan. So whatever he does, I agree. And actually, yesterday I was fighting with somebody who was very pro-Biden, and I am not, that how I said he has saved the world. That is not Trump, but Elon Musk.
Yeah.
In terms of this media in the US, similar in India. In India is the other side, but where the media thought that they are the gatekeepers for views. Yeah. So I think Elon has done a good job. I don't know whether Twitter has not turned around yet, but it has become big, and one day it'll turn around, and particularly now these advertisers can't run away. So they will slowly come back to win favors from him, or at least not be on his hit list.
Yeah, I love that Elon's playing such a key part in Trump's administration. Let's see what kind of outcomes we end up with, but it's truly very exciting. But Samir, since the markets have been kind this week, I want to start with what you worship in your office, which is visible on the screen as well. The letters NAV. Since that's the crux of your investment philosophy, let's start there. When and how did you arrive at this?
So first thing, it is not NAV only. There are Ganesh also.
Amongst the other idols.
But I put NAV to remember. Actually, in the olden days, people, you ask me, because I used to work for Alliance, first in New York and then in Mumbai. So in Mumbai, they would ask me, who's your boss? My boss is my NAV. Because if my NAV is good, they can all go to hell. Nobody can do anything. So sorry, your question was in context of my
broadly
career?
Summing up your investment philosophy at large.
Acha. Okay, so, now people may say, oh, NAV is like too much of a micro goal in life. But the reality is that you must have some clear outcomes and in mind. And in our business, it is easy. Yeah. In some other businesses, you don't know what it is. In our business, the number measurement is very precise. The benchmark is very precise. The competitors are very precise, and they can give their stories if they are doing badly. That, we are long-term investors and you are looking at 1 year, but then we can have long-term also after a few years. So NAV is a good summary of our business success or whatever. But I have been doing this for now 30 odd years. So many people call me the oldest public markets fund manager, but I am actually the most experienced public markets fund manager.
That's a good play on that.
It is because the other guys who were there in those days, started around my time, either made too much money or basically got burnt out or did not really like the work, but they liked it as a job. So I really enjoy 100% of my job, so I will never retire. But because the guys in those days were only the Unit Trust of India and State Bank of India mutual fund type guys. So those guys had to retire when they became. So I am never going to retire. So I have India's longest track record as a public markets fund manager out of 1 point whatever billion people we have.
That's amazing.
So during this time, the philosophy has come. But are we talking straight away of the philosophy? I can talk, but whatever way you want to talk about it.
Yeah, we can start with that. And then, we have other topics that I want to dive into, such as new.
So basically, so what happened, I was working for Alliance Capital in US. I went to IIT and then IIM, and then I went to working school. And during that time, I got a job with Alliance, which was a mutual fund company, and there was no India plans because there was no India was not open.
Yeah.
But by chance, I joined on June 1, 1991, and the reform started in July 91. So slowly they said you can cover India also, but separately they had a strategy of doing emerging market AMCs.
Yeah.
So plus minus India, they did them in Poland and Brazil and South Africa and Korea and Taiwan and whatever. So when they said we are doing India, now I had a choice that either I continue in the job that I had got, which was to be an Australia, New Zealand, Japan analyst, and remain in New York, or if you want to be part of the India thing, for which I had done very basic stuff for them, not really. The decision making was theirs. Then I have to move to India. So I took that bet and moved to India. Now, because I am coming from Alliance Singapore to Alliance India, I am the CIO.
Yeah.
But I have not been fund manager for a day, not been an India analyst for a day, because there was no India being, I was doing Australia, New Zealand, Japan.
Yeah.
So, but just like these days, even those days, it used to take 2 years to get approval for an AMC. Okay. So now during that time, I am nothing else. I am waiting when Alliance India will get approval. So during that time, I used to meet all companies and brokers and players and all these fund managers of UTI and others. So then my game was that I must bloody beat the index. That is my goal, because which is today also is the goal. And that is why NAV. So, but in the US, if you beat the market by 0.5%, 1%, but do it for a long time, you're a hero. Yeah. So I said, my goal is somehow I have to beat this index by 1-2% when I get the money, when we start the fund.
Yeah.
So then during that time, suddenly dawned on me, let us say my index at that time was the BSE 200 index. Now it's a 500, but same thing, 200 index. So let us say I don't buy 10 companies, which I have rejected on the basis that they are very bad on some factor. Some is blatantly overpriced, some is blatantly cheater, bloody fellow that we all know. And I buy 190 companies. Will I beat the index? So to me, it looks at it's very viable that don't worry which one you will buy. Just the most blatant ones only I will remove. I won't even remove 20 bad managements, even if I know 20 bad management, but only 2. And I will remove 2 highly leveraged companies, not all the highly leveraged companies. People these days say, we don't buy this, we don't buy low ROE. Suppose you didn't do that, and out of 20 low ROE companies, only you rejected 1 or 2. Yeah. And for very bad management, you rejected 1 or 2. And then for very expensive, there might be 30 expensive companies, you reject only 1 or 2. The reason is you are not overly risking anything. You are only betting that each factor is generally related to bad performance, but you don't know. Yeah. So don't do anything over. And you come down to, and you can find more bad factors. You could say, nowadays you can say disruption. Yeah. But don't reject every company that has been disrupted, because we are only trying to beat the bloody index.
Yeah.
Because one thing I have learned is, if you beat the index, you beat everything. Because the equity index beats everything.
Yeah.
And that means other asset classes. And fund managers can't beat the index consistently. I have done it for nearly 85% of my years out of 30 years. So then I went to US. I used to go there every now and then and say that I have this idea that instead of 200 companies, I'll buy 150. I will find 10 factors, or I give these kind of factors. Yeah. And I will reject 2 to 3 companies on this. And Baki will buy and we will outperform. So this idea was liked and not liked. Not liked in the sense that the client wants me to tell him a story.
Yeah.
I find these multi-backers. I analyze good managements, which nobody knows.
Yeah.
So then they said, you reject as many as you want, but after that you spin it and say, I'm going to find the good.
The narrative that stitches it all together.
Because narrative में काम नहीं है. But actually I am convinced that खाली reject करना है. But हमने भी बना लिया, हम भी वैसे करते हैं कि we are trying to find the good. The reality according to me is that the managements of the companies don't know that they will turn out to be good. Because every guy who starts on day one, and even if some turn out to be cheats, I don't think on day one they decide कि, After a few years, I'll cheat everybody. Maybe once in a while they say that.
Yeah.
Mostly everybody tries, everybody works hard, and then some get some success and it feeds on itself. And my favorite example is that, first of all, before that is that the managements also don't know that they will succeed so wildly. So if they can't not believe, they don't know that. How will an outsider, after meeting for 2 hours, know? For example, I bought Bajaj Finance in 2011. At that time, do you think that there's any logic for Rajiv Jain or for Sanjeev Bajaj to think कि वो इतने बड़े हीरो हैं that they will create a 40-50 billion dollar market cap company? There's no reason for them to be out there. They were doing quite miserably in life. But we didn't have any bad factor. हमने कहा ठीक है, you can buy 2% and hope it turns out. When Steve Jobs died in 2011, he had been working in Apple as in on the second time, I think since 1999. And the iPod, of course, had been launched in 2004 or whatever. And then the iPhone had been launched. iPod had been launched in 4 and then iPhone, I think, in 2007. And in 2011, when he died, he did not own any Apple shares. He had $5-6 billion of Disney, which he had got for selling Pixar. So why didn't he know that I should not own Disney? I am the board member. I know ika to future hi nahi hai, because actually it has not turned out to be.
Yeah.
And my Apple will be a $3 trillion company. I should switch because nobody knows.
Yeah.
Therefore, we say ki reject karo. And when you can't reject, then you make some story as to from the ones you couldn't reject, which ones you bought. But actually the first part is done 60-80% of the job and rest is stats. That so many companies do well, and if you can reach. So that is a big picture philosophy, and it has just worked again and again every year of nearly, not every year, but broadly every year of our life. Yeah.
That's such an honest confession and so honestly put as well, because, most fund managers will make up all the narratives in the world. We've heard so many come up with, things like consistent compounders, but these things are only visible in hindsight, right?
Correct.
And hindsight gives you the grace of being able to say that. But when you're looking at things to reject people or teams on, there's so much, every fund manager ultimately wants to back the best management teams. And everyone talks about finding the great management teams. But how do you weed out the people you should reject?
No, I'll do big picture. So if we are not rejecting only people, we are rejecting valuation also. Sometimes we are rejecting growth rate. I'll tell you. So big picture is they're the guys who make money. For example, just to tell you, big picture, if I look at my Alliance plus Helios, but in Helios we have a performance fee also. If I remove the performance fee, because it is important what we got from the market now, how we shared it with the investor is second. So the market is up some 37 times. And our NAV, because many of these guys were there in Helios, of course, for the whole 18 years, and one of them from Alliance, is up 550 times in INR. Okay?
Wow.
Without knowing anything about who will be a hero. Because, look at it. So if you ask anybody, how did you do well in the market? So he says, we buy good companies and hold them for the long term. This is the height of bullshit. Because today you know it's a good company. How did you know then? There's no logic. For example, Kotak Bank is up some 400-500 times since 2000, whatever, since 90, whatever, say, le lo, Now, in 2003-4, it became a bank. Before that, Kotak was a broker. How would you have known in 2003 that Kotak broker will be a good banker? Because banker का अलग perception होता है ना, that they have to be this, that, whatever, corporate governance, whatever. And if you say no, I first check whether he's good. So फिर you have to give him 8-year testing, because you have to say cycle में क्या हुआ, in a good time how did he deal, in a bad time how did he deal. So then you can't start your calculation for Kotak from 96 and say I bought Kotak in 96, I held it for 50 years, 20, whatever, 30 years. I buy a good company and hold it for the long term. How did you know? Why would you think that Aditya Puri, who has come from Citibank Malaysia to India, why is he a hero? Why? Nobody knows. Because at the same time, which you may not know, there were 5 other banks which had the same logic. The private sector has been opened up for banks. But there was Global Trust Bank, Times Bank, new guys, and Centurion Bank, Bank of Punjab. Now, all those guys also had CEOs who were bankers. Actually, one of them, this global trust, supposedly had a high profile guy, some Ramesh Gelli, whatever. अब याद इतनी पूरी सिटी बैंक मलेशिया से आ गया इंडिया तो क्या बड़ी बात हो गई. So how would you know? So you don't know.
Yeah.
This is part of our thing. You don't know anything about anything beyond a point. So what we say is how to reject. We say what are the factors which are normally associated with bad performance. So known bad management. We are not discovering, a normal guy and saying he's bad. हमें क्या पता?
Yeah.
Or high valuation, or for the next 2-3 years, very low growth rate, or nowadays, after last 4-5 years, we think there is disruption in the sector, so don't tell us that some movie is going to be a hit. I mean, this kind of nonsense that, oh, this movie has advanced booking, so you buy the stock. The sector has been disrupted. Even if this movie, you know, which movie I'm talking about, which finally doesn't seem to be at least having good reviews, ye faltu ke out karte jao. So we are rejecting. So we are not rejecting only management. The second part of our thing, which is different from others, is if you reject the bad, you are not left with the good. You are left with the not bad.
Yeah.
So what that means is, if we say that a company has very high valuation, so we don't like it, doesn't mean what is left is very cheap. So we are only, and if we say this management is chore, doesn't mean everybody else is some paragon of virtue. No. Pehle bad ko hata rahe hain. Then you are left with the not bad.
Yeah.
And the two lessons are that all the 8 factors will never, ever be good. Some will be not bad only. For example, in a normal time, if the company is doing well and its earnings are doing well, but the stock price is also doing well, you're not going to get it cheaply. But you should not be blatantly out of line with peers and history and all that. But it doesn't have to be cheap also. So the difference, I think, with the fund management community is they are not able to handle telling a customer that some things are not great. They will say, we buy best corporate governance and the best management and the best history trading at below market valuation. No, nothing you're going to get. And second thing is, if you really ask them, what is good corporate governance? There's no answer.
Yeah.
So we are saying all the 8 factors have to be not bad. And some of them have to be good, but not all 8 will be good. So corporate governance, I very rarely say is good. But we should not be blatantly bad that we know about, yaar, ye to padaishi chor hai kind of guy. Second thing is that the other guys are not saying, for example, if we say a company is expensive, it is not that the other guy is saying that he doesn't know it is expensive. But he will say, I know it is expensive, but the management is very good. And we say not required. This trade-off is not required because so many companies do well over a 2-3 year period, which I can explain separately, that there is no need to do this trade-off. That is the difference. It's not that when I say that a management is bad, the other guy is not going to say it's good, but he will say it is very cheap.
Yeah.
So he's doing a trade-off between our 8 factors. For example, if I say it's being disrupted, it's not that he will say it's not being disrupted. He'll say, but that is over 3 years, and abhi we have a 2 year window, something like that.
Yeah.
Means the factors are not कि हमें पता है उसको पता ही नहीं है दूसरे को. No. Everybody knows. But what they are not understanding is that so many companies do well over a 2-3 year period. So many means half the companies beat the market. It's just arithmetic which people don't appreciate because they have been brainwashed by Mr. Buffett, who says that very few companies do well in the long term, which is 20-year type period. But you are not supposed to start your investing with a 20-year horizon. You are to do it over 2-3 years at a time.
Yeah.
If it continues to do well, you are holding it. If it doesn't do well, have a nice day. Because you are not being wrong on the promoter. Nobody, he also doesn't know. And the one more thing which I don't understand is that we, as in the public market guys, and you must come to public markets, give up your private bloody nonsense. So the
We'll
public
talk
market,
about public versus private.
so the public market guys have one advantage, which these guys want to give up, which is we can walk away. So usko jaan ke bolo, "Arey, we are partner, we are 20 year." Why? No. Every day we will evaluate you. Every quarter we look at your result. If we feel you are doing well and are expected to do well for the next 2-3 years, 1 year, theek hai. It's not that stock has to go up. For example, my HDFC Bank is my top holding, hasn't done anything for 4 years, but I always feel कि ठीक है. But suppose HDFC Bank had come during this period and said, RBI has rated us, हमारा ये नुकसान हो गया, कोई siphon हो गए, कोई corruption हो गई, तो हम लोग नहीं, we are long-term investors. We don't need to be. That is the advantage of being listed universe players.
Thank you for sharing that, because I think so many new investors have come to the market and have read all the books of Warren Buffett, Charlie Munger, and then they think that, they have to find those 5-10 companies that they can hold for a lifetime. But that's a very refreshing take that I'm
So
hearing.
just to tell you on that, Mr. Buffett in his letter, 22 ka letter, he wrote that my satisfactory track record or something like that, which is really very good result, but is a result of a handful of decisions. This is his lines. Some 10, 12 decisions in his life. And he himself says, more specifically, one every 4 to 5 years. So, if your odds are so low, why will you play that strategy? You play my strategy, which is say to yourself that I'm investing with a 2-3 year view. But if you know कि 5th year में वो खराब होना है, फिर नहीं लेना है. You have to say that 2-3 year view, but after that we don't know whether these guys will deliver or not deliver, या valuation क्या होगा. But we are going in, but not that I know in 4th year is going bankrupt. But since you told me 2-3 year view, 2-3 year में it's okay. No, obviously not. But generally speaking, neither you nor them know, and things change and preferences change, and the number of people who can do well over 4 years, by definition, will be lower than the number of people who can do well over 3 years. But every year, from that group which is doing well, they have to do well 1 more year. So some of them will be able to do 4 years, but then they can't. So when you look at over 20, लगता है nobody has done well. But why did you have to go in with a 20-year view in the beginning?
And what's very interesting now, coming to the private versus public debate,
There's no debate. There is no debate.
But I'm also realizing that after 8 years of doing private markets. But if you just think about the disruption which is happening, be it in the US indices, which were in the 90s, all banking, FMCG, retail stocks. Now, do you think a similar story will play out for India, where the top 10 stocks will get replaced by only tech companies?
No, so because their growth rate was high and those winners came, but that is not an issue of private versus public. That is okay, you can say tech. But
we'll go deeper into this.
First, let me do private versus public, because I have basically tried to stay away from private. Big picture, my logic for Indian private is that except once in a while, the Indian model is a copy of the foreign model. Even food delivery was not made by us. Ola was Uber or whatever. So when somebody in India is copying it, it's not one guy who has the right to start to copy it. 20 people will try to copy it. If you're doing something really new, then only you are doing, nobody even realizes you are doing it, because you are doing it and others don't even know कि कर क्या रहे हो, which can happen. Jैसे Amazon in 90s maybe, or somebody doing something when nobody else was doing. In theory, what Elon Musk is doing with SpaceX, the other guy can keep dreaming, but he can't go near it. But if you're just copying a model, there'll be 20 Indian IIT guys who will go to 20 funding partners, and 20 will start the game. In the end, 2 will be winners. If you have those 2, you have made a lot of money, because you are not counting in the capital spent the 18 guys who gone to zero. So according to me, big picture, if you counted the entire returns for the entire industry, they are not going to be high. They'll be lower than our index. But the winner take also ho jata hai. But you have to have that winner, and that you can keep saying, oh, I got this one winner and all that. And second thing is, because of the number of private equity guys, I don't know, but big picture, every guy wanting to start would go first to the top 5, 6, 4 guys. So how does the 20th guy, he just goes and stands in a queue? I don't know. I don't like it one bit.
And I think I see similar parallels of what you're talking about also in the public markets, where where the same idea will be attempted on by so many different teams, which will be competing with their access to capital. No, as in like the IIT teams that are competing with other companies as well for the same market, but ultimately it's just one or two outliers that remain, but you can only know which those players will be in hindsight.
That way I agree. But
Yeah.
इसमें क्या है कि because you can shed them along the way.
Yeah.
You see, it's not that I only bought HDFC Bank in my life. I keep saying I own it from day one. But it's not that in my life I owned one. So I would have owned, which I have actually forgotten because they fell and you sold them in the first, second, third year of them doing badly. And by that time, they may have been down 20, 30%. And so maybe I bought it in 96 and by 98 it was not doing well. Let it go. So वो छोटा सा trade हो गया जो fail हो गया. But this ability to weed out is the reason why the public markets is easier to do, easier to manage psychologically, practically, and mostly gives better returns. In private equity, some hero will make a lot of money. And of course, that guy, you can't argue he's made.
Yeah, the returns are very, very skewed. I think the power law really reflects there. And when you think about you backing the new age stocks, you've backed Zomato, Policy Bazaar, and several of the new age names which are coming out now.
I have not backed them because I don't buy them in some pre-IPO or something. I just buy them when... So, for example, Paytm IPO happened at 2000 and we bought it at 500 in 22, I think, when it was 500. Then it went to 900, then fell to 300.
Yeah.
So if you call that backing, okay, Zomato, we bought at 52, but I don't call that backing anybody because I am buying. I have not even met half of these guys. Okay. I just buy when my team is meeting some of their guys, but we don't say, oh, call, our second largest holding is Zomato, but I don't need to meet. I have met the CFO once or twice, but I can relate to what is the story. And I actually don't want to be friends with promoters because in my life, I've seen that if you are a friend, you mostly cannot sell. And I have gone from being long to being short in effectively 1 or 2 days. Not in the same day, but effectively I first sell my long, then I say, it's a short hona chahiye, kahan long mein phase hue the. So, and this is after making in one case 43 times on the long.
Do you want to share the name of the company?
नहीं वो मैंने पहले किया हुआ है किसी इसमें call में when I was excited. Now 1, 2, 3 years have passed. So I made 43 times and then we all agreed that we should sell it. So I sold it. Then after 2 days or 1 day, I'm like, यार ये तो short होना चाहिए. Okay, so whatever. So the point is, in that sense, we are really disciples of the NAV, and we are because when I buy on the screen, I don't owe you anything. Even if I made 100 times, I won't say, oh, promoter, I'm thankful to the promoter. No, I'm thankful to the promoter. You gave me a QIP, you gave me an anchor, I'm grateful. I go and buy on the screen, I helped you. ये नहीं चलेगा हमारा कोल्ड वो है okay but point what was that public market में you can walk away. It is such a big advantage which some of these guys have voluntarily given up. इसमें कोई यारी दोस्ती का concept नहीं होना चाहिए ना because our friend is our investor. Our friend is not the company. These guys want to make the company the friend because they think that the company will give them information. I don't need any information. I don't want to talk to them. I talk to them as part of this thing and we meet in conference. But it's not, I'm not interested because even if somebody gives some crappy information, वो 2 महीने के लिए होगी. उसमें क्या करेंगे? अब जैसे when Zomato has gone from 52 to 300, at 52, what could he also didn't know that he's going into Blinkit.
Yeah.
And this money has not been made because I bought Zomato for the food and it went to 300. That company will find new things to do, then only you'll make.
Yeah.
And at that time, you will analyze and say, looks good or not good, and so keep it for another 1 or 2 years. Now, in that time, in the Zomato case, there was this controversy that the Blinkit has been bought from the husband of the HR person. I said, what nonsense. Who will say that because my HR partner's husband owns it, therefore I'll give him more money? So I said, this is not a conflict. This is just a random thing. Now, it's a view. So these things, even if you talk to the owner, management, promoter, what he's going to tell you the truth. Nothing you will know. You can feel happy that I spoke to him. And I'm saying half of these things don't need that kind of this thing. You have to take that call. Therefore, we say everybody has the information, but interpretation is different these days more than before. Previously, information itself was not there. Now, information plus minus everybody has. Now you say whether it's good or bad. That's why it's more interesting now.
Yeah, I think the information advantage has truly been weeded out
Gone,
of the
gone.
system.
Yeah, correct,
But
correct.
when you go from 2% holding to now your second largest holding without meeting the promoter, what are the softer elements that you're looking at, or
No, no,
softer or
no.
even
So
quantitative
meeting
factors?
means we are attending all the conference calls.
Of
We are
course.
reading all
Yeah.
the transcript.
Yeah.
We are comparing it to others. We are looking at the margin, the food में कितना हुआ, उसमें कितना हुआ. मेरा कहने का मतलब है, for him to talk to me, I will feel happy, but it won't change it beyond the point because his numbers are showing. And main thing is 90% of the time the discussion is the same. But some management you talk more to because, either they travel more or I travel more there or whatever, and we meet. What I'm saying is it's not for me ki requirement ki I must meet the promoter and look him in the eye, because looking in the eye has not worked. That's what I'm trying to say. If you're overly friendly, you will in the end have a problem when you have to sell. That's what I think. Because I have seen it once or twice. That, बेचेंगे बुरा लगेगा. So there was one company where I made like serious, but this I told also. I've told all these stories before in different contexts. So there what happened, we made 100 times, okay, in the 90s. So after that, I was selling. And I sold along the way also, not that on the full amount you make 100 because you keep selling, but still from the first purchase to the last sale. So then he said, Are, you are selling the stock. So I said, sir, in these multinational companies, now we have all these rules. We have analysts, and if they rate the stock as 2, nothing I can do about it. So some story I have to say. But because you can't say, no, thank you very much, you're overpriced. Because so what I mean is, it is better to be at a distance because it is, first of all, they are not telling you when you are meeting, it's not that you are getting extra information these days, because everything is available.
Yeah.
Transcript. I think if you read 6 transcripts, last 6, or maybe 8, our analysts, we say read at least 3-4 years of transcript, you will know every issue that has been raised by anybody.
Yeah.
And then you broadly feel whether you believe in that issue or not to the same extent as whatever the questions raised. This has happened, like this one, conflict of interest, he's your, that nonsensical. For example, I also rejected the Paytm ka argument that Paytm employees, not employees, but the Paytm has not done KYC of some customer. I said, oh, no. These guys, the average amount is 10,000 rupees or less. Secondly, not one customer anybody has said that any customer has lost even 1 rupee.
Yeah.
तो आपने नहीं किया लेकिन कोई चोरी किसी की नहीं हुई. Nobody has said that this money was so big that it was routed to Dubai. No, if you counted the total number of customers and multiplied by 10-20,000 rupees, chalo, this was the balance. The total amount was 4-5 crores. Not one guy had been arrested. Not one guy had been stopped. So I said, if you have 40 million ki pata nahi kitne customers and some 50,000 because on the app they refused to press the.
Yeah.
So I said, इसमें क्या serious बात हुई? इतनी क्या लड़ाई हो गई? So we didn't count it as but that is our view. But now how to control that that actually turns out to be a big issue and you think it is not an issue is we buy only 2% in these smaller stocks.
Yeah.
वो 25 में से आपका काम हो जाता है. That is the basic thing.
So are you buying options because you're only buying 2%?
No, we are not buying. We are not buying. So we have 2 kinds of stocks. We have these big stocks like ICICI Bank and HDFC Bank, which we buy 7-8%. And each. And then we have these, now they become bigger, like Zomato has become big, but when I started, I bought only 2. Then slowly, it's not that only stock price appreciation has got it to this, but then you become more confident, one more result, one more thing. But what I'm saying is, I also reject the idea many people say that, suppose they say we buy only 10 companies or 12, these concentrated guys. So therefore they are buying, let's say, Motamati 7-8% per name. To buy 7-8% per name, you need to be sure that this guy's history is good, this is good, his management is good, his outlook is good. And therefore you can't buy it in a bad time. You can't suddenly make a stock which is currently being charged by RBI to say, as my top holding. But you can buy 2%. So, or Zomato, when it is 52 and making a loss, and you say, as my top holding, no, it's a bit too much. So, but you can buy 2% if you think everything else okay. So that is how we buy some 20 odd companies which are 2%. So total 40-50%. And the other 50 is regular companies, the TCS,
Right.
Infitypes, and so that gives the angle. And then with new money or with, if these things are doing well, and mostly they do well for us, but not all of them do well, then you add, and one guy will disappoint you and lose 25%. So you have lost 0.5% on him. So when you sell it, you have 1.5%. Maybe you'll buy the winner, whatever. Because by that time, that stock has done well for 1 year. You are also more confident, more information, more whatever. So that is how it is. It's not that, I want to buy 8 or nothing, which is what this concentrated guys in the end blow up on, is what we think.
Yeah. And when you look at, like a model like quick commerce didn't work in the US, but I'm sure when you're looking at a company like Zomato, you're also analyzing what's worked.
100% I knew it will work. 100%. And why it won't work in the US? Because, and even for food delivery, first these guys said that 80 rupees, because on their average order is about 400 odd rupees. So they get 80, 100 rupees. You look at India, you look at pollution, you look at traffic jam, you look at parking, you look at the fact that Netflix, you're paid 800 rupees and you want to recover Netflix subscription. So if you go out for a restaurant, you can't have. So you go once in a while. You don't say every day I want to go. Plus the new kids and kids who don't know, my daughter doesn't know any cooking, nobody knows all these things. So that part was there. But on quick commerce, the questions were 100% wrong. The question was, who needs something in 10 minutes? The answer was, if you are not paying for it, everybody needs it.
Yeah.
And in big picture, you don't need. You don't need to pay. Of course, now it's a bull run, you can charge 50, because say the order is 400-500 rupees. Okay, so that fellow is first making 80 bucks because 15-16% तो उसका margin होता है retailer का gross. आपके 80 रुपए तो आ गए आपके पास. Now 80 will not be enough, but when you get enough orders and they will pay for your fixed cost, so the margin is not bad, 16-18%. So then after that you will stuff some non-branded, your plug, your switch, which they haven't done, but I thought they will do. Little bit they are doing. Thirdly, the store is open for say 18-20 hours. The shop is open for say 10 hours. So 7-8 hours you have no choice. Fourth is the same old thing that in India this delivery and all is cheap. वहाँ पे US में, because the courier guy, delivery guy only will take away all these gains. And also again the same old thing that people now, although everybody thinks that they have a servant, they don't have. They don't have maids and all to do shopping. They come, these maids come to do some particular thing, cleaning, utensil, washing, but not go and get things. And the main thing is, if you're paying 5, 10, 20 rupees, you will easily get spoiled. After some time, you would have forgotten that they. And then what you can do is increase your order a little bit in case there is that cut off. कि भाई 500 rupees नहीं 700 rupees में हुआ है, okay, आप अगले महीने का भी टॉयलेट पेपर मंगा लो, क्या फर्क पड़ रहा है? If you psychologically don't want to pay the delivery fee. So broadly we knew it will work up to a point, but now everything works beyond everybody's what works beyond imagination.
Any other truths like similar in Paytm or Policy Bazaar's model that the market might be overlooking?
No, market is not overlooking. I hope they are now following it. My big picture thing was that we are not relying in any of these things for end consumer growth. Because end consumer growth तो है ही नहीं बेचारे, बड़ी कम है आजकल. We are playing for change of way you buy. Because that is you are taking share from some weak fellow next to you, which they say Amazon. We know who they are taking share from, but we are not supposed to say. We mean they are not supposed to say. Otherwise, government will say, "Oh, you are taking share from here and there." But big picture, and after some time, you'll have to again rely on the overall growth of India plus say add 3-5% for market share change. So right now, as in the last 6-9 months, there is slowdown in the economy. So therefore, for the fund managers, investors, you are not able to easily see stocks which you can say they will grow at 20%, 25% for 3-4 years. मुझे लगता है all these guys are in that category. But still, we have only 15% in these four. It's not that we never overdo anything because our returns have not come from betting on one stock. And that is why every evening I can see, and I do see Netflix, because I don't care. Because no one stock is going to change my life, but overall market can, okay, what can I do? The whole market falls. But we are not betting on any, and particularly these names are all like Zomato has become 6 or something, others are 2.5, 3, 3, 4, 14, 15%. So we not overdo anything. But every year you need some new story. But I can tell you once again, nobody knows.
Yeah.
My favorite example for that is Varun Beverage.
Yeah, that was going to be my next question. Such
Oh,
an
really?
iconic investment, 10x since 2019.
But उसमें आप बताओ, उनको कैसे पता? Nobody knows. So in
Yeah, and how
90,
did you know?
no, I didn't know because I buy 2%. Nah. My game is, I don't know. So 2019, the story was that they have got from Pepsi the South market,
Yeah.
and they had whatever they had. So they said if these markets have lower market share for Pepsi, lower margin, and we are getting it cheaper than our own valuation based on market cap divided by EV divided by अपना cases. तो हमने कहा, वो कहते हैं तीनों में कुछ कुछ इम्प्रूवमेंट कर देंगे. तो हमने कहा क्या इम्प्रूव करोगे? अच्छा जी, we will buy sugar in bulk, we buy PET in bulk. अब हमें ठीक है, very good. And they also say कि when we bought in North, we did this. Then how will you increase market share? Oh, we will send more coolers, we'll have more trucks like we did. Who knows? But doesn't look bad.
Yeah.
So इसके लिए कितने परसेंट डालोगे? 2% ले लो भाई, तुम भी आ जाओ in the list of no bad factor, newer company, history limited, but all the 8 factors look okay, not bad on any and good on this. So now what happened, if you've seen this, because you know this. So suddenly they had this drink called Sting. हमें क्या पता?
Yeah.
He also didn't know, in the sense, nobody brought it up in the meeting to say, by the way, we have one more bullet point in our favor, that we have this drink called Sting, which in test markets has shown that this is going to be a big hit. हम कहते हैं अच्छी ये भी डाल दे, हमें पता ही नहीं उसको. Nobody knows because it was never brought up. All our meetings got over, everybody went home. The questions were big picture. How much is aerated versus, healthy and unhealthy, and how much is water and what is juice. But nobody thought that energy drink भी hit होने वाली है. So, and after that, by the way, COVID came.
Yeah.
So in COVID time, that stock fell, I think, 50-60%. But that time it fell so much that we didn't sell because it didn't look, what can the company do and all that. And after that, it went up. So actually it's gone up more because cumulative is gone up 10, but from bottom it might be up more than 20 times. I don't know, whatever it is from, say, post-COVID. But we bought it pre-COVID. So what I'm saying is, that's what I say. Nobody knows how good the good shall be.
And how do you think about pricing in this situation? Because it had already doubled from its IPO price at that point.
Yeah. But I'm saying that's why then you are compared. It has gone up 25 times. So I made 10. So it has gone up 1.5 times. Yeah. No, उस वक्त because that one you have to compare with the consumer guys. So at every stage it has looked lower than the consumer guys, and growth because of under penetration and particularly Sting being much higher. So even now we own it, but now we don't consider it in that 2% category. We consider it that you can make reasonable return, but not those obscene returns. So we put it in the well-known regular guys who can grow 15-20%, and that also is in shortage right now in terms of ideas. But what I'm saying is the real money is made when they have to. So you are not making money from buying a good management. You are making money from a guy who turns out to be good.
Yeah.
But you don't know that he will turn out. That is why you need to buy more than 1 or 2 or 3. You need 25 and hope that 10 work and others don't blow you up. So the blowing up will not happen if you rejected all the bad factors. It was not expensive. It was not bad management. It was not bad history. It was not getting disrupted. But they may still not be able to do some mind-blowing stuff. Yeah. But they should not be frauds. They should not be, we never thought of this factor, that factor. At least that if you cover, then those 10 may plus minus break even relative to market, let's say. That means the market goes up 10%, कोई 20 चला जाएगा. In the end, you won't remember those names. But जो चल गया, फिर हम उसकी स्टोरी आपको आके सुनाएंगे कि what a great stock we found. That is
Yeah. And when you think about the Indian consumption sector, because in the private markets, there's a whole bullishness around consumer brands being created. But you are betting on the travel segment at large, again, coming to the consumer side of it. So, how are you thinking about broadly the consumption theme? Because consumer durables are not performing
So actually,
compared
our
to.
largest number of shorts are in consumer sector. Today only we were showing to one client, we have 9 shorts in the consumer sector. But one reason is because of your private equity space trying to create brands for the things which all these regular
You
guys
want to
used
take
to do.
some names that you shorted?
नहीं नहीं, वो शॉर्ट सबको पता है मेरे नाम, वो मैं रोज हिंट देता हूँ मार्केट में जाके. बट बेसिकली सम ऑफ देम हैव बीन शॉर्टेड फॉर अबाउट अ ईयर. पेंट वाला हैव बीन शॉर्ट फॉर मोर देन अ ईयर.
Yeah.
Then actually now I'm also short the AC guy, because how can you have another bad someone like that he had last year? But it's not done badly. The stock is done okay. Anyway, so the point is travel में क्या था कि the travel logic was first it started with this experience business. Oh, everybody wants to go out and all. And then these guys have been able to convince us that these are 7-8 year cycles, because the investment when it starts, it takes 3 years for a hotel to make and 4 years, and we are in this stage and that stage. Plus, I came from Alliance to Mumbai in 1993. That time for Trident, which was not called Trident, because the Oberoi's in Nariman Point, I used to pay 6,000 rupees. Till 2 years ago, I don't know now, because now I stay at the Trident BKC. But the Trident, I could have bought for 9,000-10,000 rupees. So that means 30 years mein, the pricing was up only some 25% cumulative. So I used to think it's a bada sasta hai in terms of not having moved up from the 90s, when one bull run of our life we had seen in those days in these things. So generally we have these 2-3 stocks in travel, but अब वो भी काफी हो गया. But we are pushing our luck. Actually serious money has been made like 3-4 times, not 20 times, 10 times, but 2-3 times, particularly in Indian hotel and all. And I have also this lemon tree, which is 50-60 ka these days, whatever is the price, 100. And so it's not up some great, but it's okay.
Yeah.
So we are not, I would not have remembered that travel is one of my themes, because it has been played out and slowly whatever is there, yeah, but it's not so.
And what's the reason behind shorting so many consumer stocks? What are the headwinds that you're seeing in the consumer?
So consumer ka headwind, one of them is this. Second is that the growth rate relative to valuations became too high because of all these PMS guys pushing these ideas of consistent compounders, which was from day one, whatever idea. So, and third is in particular in paints, because of Grasim coming in and all that. Generally, the thing is that the growth rate is very unexciting. In the case of consumer durables, our big picture issue is that each and every guy in the world wants to sell consumer durables in India, including the retailer. Croma कहता मेरे से ले लो, or Reliance will say take from me, Flipkart will say take. So everybody can go to the same guys and get their TV, fridge, microwave. Plus, I have one more big picture logic, which is if I don't see a big global company, broadly, I think it doesn't work in India. There has to be, we are, this is that great company.
Yeah.
And somebody is doing an Indian version of it. Nothing, just because we have a middle class doesn't mean we create that company, because the middle class might be there, but the number of people wanting to get in or who have not got in, but now want to get in is too many. So in the end, it's... Plus, there's another thing that after COVID, the investment or spending or whatever by the retail consumer to buy a laptop and buy an AC, and wo ho gaya na, house.
Yeah. And there's so much talk about inflows and outflows by foreign institutional investors in India. Given you are an FII, can you share your lens on how foreign investors should think about the India opportunity? And what are the things that are not understood fully till now?
So the first thing is that foreigners in general have been bullish on India all their life. So I've been a FII since 1995 or 96, maybe 95. So as a fund manager, and then mutual fund also separately. Yeah. So in the FII, all this period, I think there are only 4 calendar years when the FIIs have net sold. And these were really bad years, 8, 11, 18 and 22. So 22 में तो war हो गया था.
Yeah.
8 भी ठीक है. 11 में वो जो भी currency का हुआ था हमारा and all that. So and this year is I think break even now. Plus minus break even. So first big picture, you are not supposed to say why are they negative. Generally they are not negative.
Yeah.
But I mean recently in October they were very like $12 billion was sold. So then because nobody knows, and actually we spoke to the brokers, they also don't know why they are selling. But my postulation was that one logic was they are going from India to China. Right. Because in September the Chinese market went up a lot.
Yeah.
But actually in October, the Chinese market fell. So they could have sold, but there was no urgency for them to sell every minute as if they can't handle the fact that China is going up and I don't have China, so I must take out of India and go to China.
Yeah.
Second, the guy who wants to go from India to China is an emerging market fund manager or an Asian fund manager. He will have 55% non-India, non-China. 22-23% China, 20% India. So, bhai, tum aur kisse base do while you're selling India to go to China. Because even if you say that China is currently at that time undervalued, it might go up. But on the other hand, you think India is long-term secular. So, ab kahin aur se nikalo. So I said, ye nahi hoga. The second was that it's going from India to US because of Trump expected to win. So that could have been one reason. But again, big picture, the guys who can go from India to US are mostly global guys. Because emerging market guy can't easily go. Hedge funds can go, but they're not very big in the world. So that also makes no sense because the global guys' US exposure will be 65%. Otamati if relative to index. And India will be 1%. So what did he say now? My 65, I will make it 65.2. And I will take it out of my 1% India and make it 0.8, but I won't touch the balance 34. No. So this is hedge fund type money, desperate type money. You kar lo thode din. So all these events have got played out.
Yeah.
It's like, okay, like revert to the normal. But there has to be one belief that if the US market is doing well, you may underperform, which we are doing every day, but you will not fall. ये नहीं है कि वो 20 up है 10 down है. Why? Because if the world is up, everybody is happy. You will be less up, more up. The Indian guy will make up by saying US is up, so I am going to be positive in life. Yeah, normally these markets are all directionally similar. The magnitudes depend on each year and what is the mood of the public. So that's why I said FI is not that overhang is over, I think.
Right. Yeah, because the media obsesses so much about this. And, when you look at the US markets, there was so much talk around the debt ceiling being moved up. But the debt ceiling is being pushed forward so many years.
I don't think a single fund manager in the world has said, I'm not buying US because the debt ceiling.
Yeah. So you think that's not an issue to worry about? Because that's why the crypto markets are exploding, right? Like
No. They are not going for any debt ceiling. No. Crypto market is going up because there is a certain part of the world which thinks the US dollar itself in a big picture sense is sort of on the weak. And plus they want control and they don't want government. But finally it's going up because Trump has said and is crypto friendly. So they might allow more ETFs and some pension fund might buy 0.1%, but it is the highest form of speculation that exists in the world. Yesterday, I saw an interview of Ken Griffin with Andrew Ross Sorkin in the Deal book. If you've seen it, it's a very good New York Times Deal book. So उसमें वो कहता है कि I still don't understand the purpose of Bitcoin, which I've also been saying. कि भाई, is it a means of transaction? It is not. Is it a mean of storage? Is it like gold? It is not. Because they say, the new young crowd can buy crypto online. You can buy gold also online.
Yeah.
You can buy GLD in US or XAU. You can buy plus minus online. So nobody knows what it is for. So let it be.
So would you be short crypto market?
No. हमें पता ही नहीं. I'm not going to be short or long. No, I have no idea.
And since you follow a long short strategy, for a retail audience unfamiliar with shorting, can you break down the mechanics of your criteria for identifying potential shorts?
Okay, but before that, you had one question that what FII concept people are not.
Yeah. What are they misunderstanding or not looking at,
No, I
not
am not
understanding?
this. I am not aiming this at your audience. I am aiming at the government that
Okay.
FIIs don't pay taxes in any country in the world. They pay in their home country. India is the only country which charges tax. So our fund has to pay taxes in India. Okay.
Right.
Normally, you get the pre-tax, you pay in your home country. So when I pay tax, so my investor, let us say, is some endowment. Now, the endowment does not get the benefit of the fact that I paid this tax on their behalf in India because the endowment itself is tax exempt in the US, in their home country.
Right.
Same
Yeah.
thing with a sovereign fund. Same thing with a pension fund. Same thing with a fund, no, not fund, same thing with an investor who's based in Singapore, Hong Kong, Monaco, Dubai. They don't have the tax to get a set off. So that 15-20% is basically a leakage. That means if I make 10%, the investor को बोलेंगे 8% बने हैं. Because वो 2% only for a very limited crowd, which might be US taxable guy, who can say in his taxes there, कि चलो जी, I paid 2% taxes in India. So when you reduce your returns by 2%, mota mati, you will fall below many other countries which are making lower. Maybe they're making 8% only, but it's pre-tax. Sorry, there's no tax.
Yeah.
So you are going to but you will never know how much you lose. But on bad days, you will realize how much you lose. And also in good days, you won't realize how much more you could have got because it is a super serious cost.
Yeah.
And this cost only works if you're going up 20% in a year. Then you can say, oh, I don't care because even post-tax it is 16 and you jokers are at 10. But if you are at 12, 13% rupee return and that becomes 12% dollar return and you lose 2% because you have to pay taxes in India, who wants to? We do it because we are full-time India guys. But who has an option?
Yeah.
Why should he mess around and all that? So it is a very serious negative. But the Indian public does not appreciate it because Indian public says, why should the foreigner go tax free? So, अब उसका वो तो US में, when you invest in US doesn't charge you a tax, but India charges you. But US made is tax free.
Yeah.
So the US public doesn't say, why does the Indian guy buying in my market not pay tax when I'm paying? So India वाले ऐसे मतलब वो कर रहे हैं, or maybe they should waive it for everybody. Who knows? Or reduce it, मतलब not waive it. But
Do you think that will happen?
No, waiving will not happen. But they should
Yeah.
stop it now. They should not say in interviews that there is scope for increasing, because what they are doing is, from their point, they are comparing the Indian capital gains tax with US, and it is lower.
Yeah.
It is lower. But for foreigner, it is higher. And because you are not willing to separate the two, in US ने separate कर दिया ना. For my local guy, you have to pay me 20. Foreigner is 0. The Indian government or system doesn't want to separate them. Therefore, then you have to do a balance. Then don't say that Indian rate is lower than US because the FII guys will not be. If you increase it 5% more, I think it will be basically over. The foreign money, because this much you can't recover.
Yeah.
I mean, you can't outperform so much as a full market that even after paying a 20% tax and just compounding every year, 0.8 kar rahe ho instead of full return, that you will be better off. So you are on the edge.
Yeah. And what about that talk about, domestic retail investors pumping in so much money that the market can withstand
market
the
can
foreign
stand, but
investors?
you don't want it like that. Market can stand for some time, but you've seen that the style of the foreigner selling is very different from the style of the Indian buying.
Yeah.
Even but otherwise that month also foreigners sold and Indians bought. So why did the market fall 10%? Because the style is different. Because for them, for some American guy, it might be 1% of his global fund. The trader is not India only.
Yeah.
What trader go, he will give him 25 positions to sell and he will say one India blow it off. Blow it off, not literally blow it off. Nobody is saying, oh, fine tune it, do it like this, don't let it fall, do it slowly, okay, then do it. And that guy put in a system, the Indian broker will jump and do it before it gets cancelled, the order gets cancelled. So Indian guy doing only India will be particular, nahi, itna gir gaya, itna bad gaya. So obviously in your own market, if that is your full-time job, you will be more sensitive to prices.
Yeah.
That is why their style is so aggressive. It's not aggressive. It is the trader who has been given that doesn't care. He has been told to sell India. He will push it to the broker and say, bang it off.
Yeah, that gives a very holistic picture of how FIIs think. And now coming back to the shorting strategy.
Yeah.
Can you
shorting, So shorting mein kya hai? The first rule is that nothing to be overdone. Not even like the long side. So we do at one time around 20 shots, but only 1.5-2% each.
Okay.
So our cumulative shots are normally 40%. Our longs are at about 100-110%. So we are net 60-70. So no one stock should blow you up. You bloody went up a lot. So that so each stock is about 2-ish. It could be even 1.5, even 1.25. So around 1.25 to 2-ish. And definitely not, even if we think that stock is going to zero, we are not going to short more than 2% because thinking doesn't make it go to zero. Yeah. So first is that. Second is that there are some obvious things. Now we want different factors. So one is like very high. So one thing is forget whether it falls or not. It should be very unlikely that the stock can go up a lot. That also will always make you money because in between the market will fall randomly. In these consumer stocks, which fell 5-10%, 15%, it's not that we thought that these will fall 30%, but हमने कहा ये ऊपर नहीं जाएंगे because they are trading at 60 times, their earning growth is 10%, they have new competitor. Why will it go up 10%? Then on there with their own weight they fall.
Yeah.
Some of them is news. So these pharma type names, when there is bad news, if we are alert and our trader can point it out immediately, as in within 1 or 2 minutes, if the stock is on 4-5%, all you have to check is broadly from our pharma guy, is this drug big, small? After, doesn't matter what the other thing, because the world is very slow. The American investor will know about it next morning. Then his analyst will write a report. वो 3 दिन तक वही story चलेगी.
Yeah.
Okay, and if it is a serious thing, don't care. 7% down, 6% down, nobody will buy it. So I shorted, MTNL used to be 300 rupees. Okay, it fell to 70 rupees. I had not shorted it because I drift up. Then suddenly we said, who will buy them? So people would say, now it's too late. The stock has fallen from 300 to 70 in those days. So now what are you shorting? Everybody knows it's doing badly. Everybody knows it is, no money. Nobody, no consumer. I said, I agree. But who will buy it? Wait to get to 12 rupees. Because forget about the fact that there is no negative news. There is no positive news. So apne aap hi, slowly somebody will remember, yes, these shares he will sell. It doesn't cost anything. Mostly you make a little bit of money while shorting because the shorts are at a premium. So we have done that kind also. You forget about whether it's late, early. Who will buy it? So there are many different angles, but remember 1.5 to 2% per name so that no one idea can block. The other thing is that because a normal long only guy or a normal retailer, he has 100 rupees, he will buy 100 rupees of stock. We buy 110, 115 rupees of stocks. So we have bought 10 extra. So the 10 that we have shorted extra against that long, we are only playing the difference. Na?
Yeah.
So that difference we make around 8-10% in a year. So you get 1.5% from that difference between what our longs do and our shorts do. So it doesn't matter if the short falls or not. It should go up less than my long.
Right.
The extra long. Because I'm comparing myself to a long only guy. So the long only guy got 100, he invested 100. I also got the 100, but I bought 115 normally, 110 to 150. So that 15 extra first I will short.
Yeah.
So that becomes 100 and then I short another 25, 30. So that 15 ka jo hai, wo to I'm only playing the spread.
Yeah.
That is very easy. Spread is easy. Absolute fall predicting is more difficult. But the fact that this stock will do better is relatively easy to do. At least at a portfolio level. Each stock may not work, but if you buy, 5 and you short 5 or mota mati, that works and it has worked forever.
Right. And when you said consumer is the sector which you have highest shorts in. What's
No,
the
no,
next?
highest shorts, nahi, highest number. Actually,
Highest number of
yeah.
shorts.
Or number weightage mein bhi hoga shayad. Yeah, maybe.
Yeah. And which is the following sector after that?
Auto,
electric.
Auto, always short. Every day short of our new life.
I've seen that you're really bearish on EV at large as well.
No, I'm not bearish on EV. I am bearish on investments required for EV.
Right.
So thing is, you are looking as the challengers, assuming you are from the private side.
Yeah.
So the basic big picture, if I don't like the big picture, I will never go long whether I go short or not. The big picture is completely flawed in the case of auto, which is that you asked everybody to spend a few $1 billion to remain in place.
Right.
That otherwise your car sales will go down unless you go to the new technology. But the new technology did not offer you that your volumes will increase collectively. I'm talking for the industry.
Yeah.
It will increase at normal rate. Now, whether your car is better than the other guy's car, or that your new car, which we have not seen, is better than your old IC. So if in the IC you had a market share of 18, now you'll have 20, or who knows, number one. Yeah. Second is, IC car, there were no new competitors. इसमें तो JSW ने भी announce कर दिया है. So JSW, then Foreigner, then BYD, then Tesla. Globally, I'm saying first. So new in two-wheelers also. So the new guys have come in. But market size, please remember, market size not increasing other than the normal growth of the market.
Yeah.
So in the same industry, instead of 5, you have say 8. How can it work conceptually? And then some of these nice folks do these ads. So that it's just free money. Okay, take it. Thank you very much. So one more of my shorts.
Love that. I'm so glad that you finally gave us a name or a hint.
No, I gave another one. I gave you the paid name. Anyway, so.
And what about which is the sector that you would say you are bullish on, where you think the tailwinds are in favor and is not making to the shorts list?
So we have these two kinds of stocks. One is these regular stocks which are growing, which we call high confidence, reasonable return.
Yeah.
So here the returns will not be high, but they'll be good. Good we consider as beating the market. Some 2%, 3% beating the market also good. These will be these private banks, bit of IT. These are regular, well-known. And we now consider Varun in that category. But
does it happen often that your companies from your 2% holding migrate to the first?
Yeah. If they do very well, they become.
Yeah.
Because then you say, I still don't feel like selling them because I think they will still do okay, but they won't make the kind of returns that we made because, they made and we got them. The second
Apart
group
from Varun Beverages, what other companies would have made to that list?
Over time, no, because over time, HDFC Bank also would have made. Because anything which has done well for us, after some time, you say it can't make 30% anymore. So that actually every successful company after some time would have, for few months, years, stayed here before we said, no, it's not even worthy here or something. But mostly every company would have, by logic. Yeah. And maybe one day Zomato also might come this side. We are still putting it in the other camp that you can make 20%, 25%. But who knows? So the second group has this 2.5%, 3% kind starting position. But if it does well and we have bought a little bit more or lack of choices. So when you say which stock is our favorite or whatever, my largest holding is not my highest return idea, which is HDFC Bank. Yeah. It is reasonable return idea.
Yeah.
So this again a difference with the aggressive world which says, if you think that stock number 6 will do better than stock number 1, why didn't you make stock 6 the number 1 holding?
Yeah.
Because we are not we are doing what we feel, which is you need steadiness also. And you need the extra boost also, but you can't make the boost follow as the number 1 holding unless on its own it becomes.
Yeah.
then you can push it a little bit and say, let it be.
Yeah, absolutely. And what's the biggest psychological mistake you've seen investors make? And how can one build the discipline to avoid it?
No, you can't avoid all these mistakes. But big picture, one thing which everybody should absorb, I have a slide on that in one of my presentations, that you do what you want. In the longer term, equities will beat everything else. Of course, I can change the long period to very long if it doesn't get beat. But conceptually, it will.
Yeah.
And once you accept it, that, for example, we have these examples that if you had invested in US in 1929 in October, you would still have done better than investing in fixed income in 1929, but you had to hold it till some 50. Okay. But still, assuming you reinvested the dividends. And same thing if you had invested in before World War II in Japan, before World War II started. So first you didn't know there was a world war. Second, you didn't know that Japan will have a very bomb thrown at its head and whatever. Still, Japanese stocks would have beaten Japanese fixed income. Now you will say, but this is if you invested that day and you never invested again. Of course, in World War time, nobody may have money also to invest.
Yeah.
But in general, when the market falls, if you broadly buy into the logic that the price that was there before one day is going to come back, even if it takes 5 years, 7 years, in a normal case, then when it is down 30, 40% and your job is still safe, please add not to the same stock, not even to the same fund manager, but to the market, because you might hate that fund manager. So I used to say when I was in Alliance that if we do badly, please don't invest in our fund, but please invest in other funds. But when they do badly, please send to me. So finally it'll be the same. Because you will be upset with one, give to the other, upset with. Bottom line is you should not leave the market. In reality, it's very difficult. But once you broadly accept it, that forget about my new investment. The old investment has to come back. So that means anything you bought in between will have basically a higher return now to go back to the original. And that you can see as many examples as you want. You choose. We know it how today, broadly, we are all at all-time highs in the world. That means whatever you ever had a problem has been overcome. So it's the easiest proof to say all the time it happens.
And so many people are building cash positions also because they think that India is very, very expensive. What do you think about building a cash position?
There is a problem in life of returns versus image. So the guy who talks about valuations, the guy who talks about bear markets, this is an intellectual thing. The guy who's bullish, optimistic, gung-ho in life, okay, they're a casual banda. We are casual bandas with intellectual rigor. So according to me, 20% cash has one philosophical problem, which is that what do I pray every morning? That the market fall or that the market go up? If I say I have 20% cash, broadly it means I pray, not think. I pray that please market should fall. Because your last trade is the cash raising trade. So if every morning I say to God, let the market fall so that I can buy, what about the 80% that is invested? So I will tell you one story. There was another fund manager who also everybody in the market knows in the 90s. So he had a stock which was 16% of his fund. That stock went up a lot. And so we were both IT fund managers. We both had IT funds. So one guy asked me, why are you not buying this stock? So maine kaha, my problem is that I can't buy 16% now because the stock has gone up some 2-3 times for him. So if I buy 3-4%, then tomorrow morning, what will I pray? That this stock go up or this stock go down? Because if it goes up, the guy already has 16%, he will do even better. Yeah. So I said it's easier for me to pray that the stock go to zero. The stock actually went to zero. So my prayers have to be very clear God should
What are
understand
you
the
praying
prayers.
for these days? We should know.
So you know what happens is, many people say, but then how do you manage a long short fund? Are you praying that the market go up or the market go down?
Yeah.
I said, no. I pray that these stocks go up and these stocks go down. No,
Be
seriously.
selective
The
in your.
point is, it confuses you
Yeah.
if you have cash. Short term, we also have sometimes, not these days, but generally have. But by the way, the other thing you had said was because valuations are high. So actually, if you look at the last 3 years returns of Nifty, they are more or less similar to last 20 years returns of Nifty, which is 14%. They are similar to last 15 years returns of Nifty, which is 14%. They are similar to last 10 years returns of Nifty, which are some 12, 13, 14%. So maybe 13 bhi ho sakta hai, but I'm saying in that range. So the last 3 year returns are not higher for Nifty. Last 5 year returns are higher for both Nifty and 500.
Yeah.
Last 3 year returns for the 500 index are 17%. So let us say कि वो भी 15 होना चाहिए था, because broadly वो भी in the long. So you are 2% per annum, 3% per annum more. So cumulatively in 5 years, you are up some 10% more than your long-term average. तो क्या हो गया फिर? How can you be so precise
Yeah.
that if you are cumulatively in 3 years, you have made some 10% more than the market, that for this I should raise. So I don't think the valuations have gone up a lot. The valuations of small caps have gone up a lot.
Yeah.
But you are most welcome to buy a large cap. You're most welcome to buy mid cap. You're most welcome to add to what you have. So I don't think cash does that.
Yeah. But that's not sensational, no. So it doesn't make the headlines.
Yeah, because then you don't look intellectual.
Yeah.
Mr. Buffett has blown up about $60 billion by sitting on cash. So how much will he make on the 350 and he actually buys a stock? First he'll have to make, so look at the big picture. He was throughout for 3 years sitting on about 150, 200 billion. The market has gone up some 50, 60%, so he lost 50 billion. Then he raised another 200 billion. So on that 150 more billion, whatever.
Yeah.
So on this 150, okay, in 1 month he has lost 15 billion. Over 10% market is up. So totally he lost, say, on 150, some 50 billion, and on the last 150, maybe 10 billion. Let's say the picture. So 60 billion you've lost. Okay. Now to make 60 billion back on the 350 when you invest. No. So that means the market, and he's thinking the market should fall. Yeah. So if the market falls 60 by 350, which is whatever, 20% or whatever, then he can say, broke even, that I was better off sitting on cash.
Yeah.
20% the market has fallen, he would not even have broken even or barely broken even. So if it was 30%, he has added value. Yeah. Second thing is, when you talk about people raising money in bad times, and what is the number of times you have done it? How many times has Warren Buffett done it? Maybe twice in his life, 3 times in his life. How much have the Indian investors done? Maybe once in their life. That last time we raised the money in some 2011 and we were right. And the total number of times you raise money is once. Because these things, the raising money of this magnitude is not that I can show you high frequency.
Yeah.
So वो track record क्या बना इस बात का कि you are able to raise money at the right time or not, because the number of instances.
That's a very refreshing way of looking at it. Every investor has stories of the one that got away. Can you share an example of a missed opportunity and the lessons you learned from it?
No, missed opportunity. We talk about going to zero. We've had not zero, but like 50, 60% down. We've had many. But the one which went to zero is because it had to be private, which I had bought in my regular fund. ABCL, Amitabh Bachchan Corporation Limited. Yeah. So it went to zero for me. But in return, I got to attend his birthday. I went for Miss India in Bangalore, which was organized by ABCL. But going away, mostly because it is our belief that so many stocks do well, that missing I don't feel too bad about. We will normally feel bad if we met them, analyze them, internally discuss them, and then somebody said don't buy it. But suppose the stock, like chemical sector, we didn't get even one of them. We got a little bit of SRF. That also at the tail end of the run. But we didn't feel bad because we never thought about that sector कि ये भी कोई logical sector है for somebody to make 30, 40 times, which many stocks did.
Yeah.
But we never even imagined that this, for example, now these solar guys are going up. They can go to hell. I don't care. You go 20 times, 30. I don't care.
Really? Even solar? Because there's so much bullishness around it.
Nonsense of the highest order.
What about the energy theme at large?
No, we are not talking energy. Energy theme is okay, but you're not going to make 100 times, 50 times to feel bad. Like your NTPC, what will you make? Some 30% भी बन जाए तो बहुत है. No, solar वगैरह में नहीं. Any of these where we conceptually don't like. For example, by the way, this stock which I was telling you about short, it went up 100% in 22. Oh, sorry, in 23. Not 100, but I think it went up some 80, 90. Doesn't bother us because we conceptually think it was wrong for it to have go that way. It can go down 100, but not up 100. So, in these solar types where there is government protection, where you can see that the actual cost of manufacture is bloody being protected, tariff, that there is global dumping, you can say, okay, we have got this protection, but protection should not get you multi-baggers. Protection can give you 1 or 2 years returns because ultimately that protection cost, the consumer or the other side is buying. One day the solar plant guy will say, I want it cheaper or I want it at international price. And even if they don't, you will think that it will be removed. So therefore it will always have this issue. And we have also seen that very high growth alone doesn't do anything. It does in the beginning. But after some time, people realize that this is not sustainable. And also, again, my old rule, show me a very, very successful company in the same sector doing well somewhere, not only in our country because of protection or 2 years of orders or something. So I don't do that. There should be a successful company somewhere, or it should be very clear, ये हमारा model है, not a protection-driven.
So, in a way, are we looking for Me Too players for India also? Something that has worked in the other markets and will work here?
100% only those. For example, in the, maybe early this century only, or maybe last century. So this, apna ye wala aaya, gym company, Talwar ka whatever. So the logic was perfect. Middle class, exercise conscious, health benefit, ye wo, and therefore, and you sell memberships. So that's what interesting. Then we suddenly realize, show me one successful gym company in the world. Zero.
Yeah.
Always fighting with the customer that you signed a contract, now he wants to walk out of the contract, you hard sold me the contract, we are not buying. Then came this timeshare valley, promoted by the Mahindra Group. So young, middle class, travel, cheaper, shared property ownership. Said perfect. Then he said, show us one successful listed, none. Or maybe one somewhere here, there, but broadly we didn't. We are not trying. We are not, you see, that's what I'm saying. We are not here to show you intellectual this thing. हम practical बात करते हैं. पहले वो model कहीं successful हो, then we can relate to it.
So that's also saying that India has no hope for producing, say, a founder like Bill Gates or Mark Zuckerberg.
India has a potential and we own it. And it is an only India model. And you only said it. Home delivery in 10 minutes. Nobody else has done it.
So everyone should just buy Zomato and Swiggy and sit.
No. What I'm saying, हमारे अलग model होते हैं India के. You can't have something like Elon Musk type. Because we don't have the risk-taking business now. We don't have that. This thing. Yesterday also in that, because I spent the whole evening watching these interviews. There was one interview with Bezos. And he said, if you look at the risk capital availability in US, that you give a random idea, you can get $50 million.
Yeah. Imagine
in 2015, 16, Elon Musk suppose telling somebody that I will go to space with reusable rockets. Bloody kya fraud kar raha hai? We don't have that concept here. But once in a while, somebody will be. But mostly we are implementation experts.
The hope on the private side is that we can produce someone like that. There's so much happening in space tech also. I don't know if you are
No,
plugged
no,
in.
I only look at listed. So anyway, I would not believe anybody who came to me, but maybe they can get sold to somebody else. But I don't see it will happen once in a while. I was
Yeah.
talking conceptual, and anyway, good thing about us means the listed guys is to get listed, you will have some 3-4 year track record
Yeah.
or more. तो वो देख के हमें आप समझा देंगे हम कहेंगे यार वेरी गुड यार never realized that this is also possible but why we don't have to think so deeply कि
Yeah.
you do
Strong opinions
for
loosely
your
held.
10% return you do all this work.
3 decades in the markets and such an illustrious career. What's the North Star metric that you're working towards now for your personal life?
To beat Charlie Munger's age and do it till then.
Love that. And I wish that for you as well. What's the best financial advice that you've received?
Best financial advice I have received? No, I have not received any, but I have learned over the years. Maybe somebody told me also, because if somebody gave me a book, I don't remember who gave, but big picture, life has been made very basically equities. But before that, the advice, which is not technically advice, but for young guys, and even though my daughter doesn't buy into it or didn't buy into it, that go into financial job. Because for the same work, your compensation, your meeting with people, everything is very different than going into a marketing and all where you are saying sir to the world, or manufacturing where you're hidden in some corner. Just taking a decision, say after MBA, to do a finance job versus non-finance. The only non-finance which has worked is somebody became a founder himself, of course. Then that is also regular. But I'm saying for a regular guy who doesn't have a strong passion, and he's just saying, okay, I want to do my MBA and then I want to do a good job, which is 80% of the crowd. Even I didn't know at that time, if somebody had given me a consulting job, I would have gone into consulting. I got equities, so I got this. So, but these decisions make a massive difference in your... Now, of course, if you don't like it one bit, like my daughter, then nothing can be done about it. But generally speaking, for people who are neutralish to these things, it is...
And with AI and robo-advisory, do you think the markets will change in terms of performance that fund managers can deliver?
So, robo-advisory, that is more for the client side. But from AI side, I'm sure people will include. But then everybody will have a little bit of AI. So in the end, it may not matter a lot. But of course, anyway, our size is shrinking. As in the ETF and index funds are anyway becoming a bigger share. So the active guys are anyway less. But we have been in the sweet spot in our life so far for active management. It has to go on for another 25 years, then you guys figure out what to do. I don't care after that.
So, but what do you think the next evolution of Helios will be?
No, we are already in our new evolution of the mutual fund. So, the mistake is that we took too long to apply for it, thinking that...
why is that? Why did you wait for so long?
Because, our offshore fund is such a profitable business. Because it's not like this 40 basis point business. So anyway, then we said everybody's doing it, we can also do it. And actually we could have done it 5-6 years ago, not in 20, because you also need a lot of money. And but it could have been done in 14, 15 or some 16 or whatever. But anyway, we didn't do it. Doesn't matter. Because all of us, by the way, all the guys at the top have been there since 2005-06.
Yeah.
And not even one guy is left.
Yeah, and why would you leave also, right?
No, not me. I'm saying all the guys. So we are all young at heart and enjoy. For 18 years, every day, other than once in a while, we have had a call for half an hour, 1 hour, including today. Every day. Only when I am in Europe, which is a bit odd, then we do it some 2-3 hours later. Every day. And every day, I genuinely look for that call in the morning. I have to do this call. Because the enjoyment part in our game is very good.
What do you guys discuss? We should make those recordings public.
No, we don't record only. But we discuss which stocks to short, which stocks to go long. And pulling everybody's leg on the way. Yeah. So it's fun.
Maybe that should in itself be a podcast.
then what happen is, फिर वो बड़े serious type हो जाएंगे सब. trying
Yeah.
to...
If you had to pick one underappreciated asset class today, what would it be?
No, but I am a equities guy only. But I recently, as in after the Trump winning, whatever cash I had personally, I bought the following four, all four: US market, gold, China, and more of India.
Okay.
I
Very
think
interesting that
I
you
think
also got China.
I think everything is going to go up
Right.
for some
And what's
months, 6-9 months. Then new stories will come. What will they do, not do? I
right.
mean, and what the US will do to China, not do. I think they will do nothing, or they will do a little bit, but
Yeah.
not like put 60% tariffs and all these stories, nonsensical stories that were created by the other side. He anyway is just talking. He's got a hedge fund manager as the treasury secretary. They're not
Yeah.
going to do 60%. Elon Musk businesses in China, they are not going to do so.
Yeah. What's the most unconventional investment you believe in that isn't widely popular?
No, I don't do all that. I do popular things only. I'm not buying unlisted. I'm not
Yeah.
buying Bitcoin. I'm not doing venture. So I
Yeah.
only do the regular stocks. And even
If
there,
you
I have
had,
HDFC Bank as my top holding. So even more regular.
yeah. If you had 30 seconds to convince a young Indian to start investing, what would you say?
Come to our office and see our returns. No. First of all, the young fellow has to know that his money should be treated well by him. And the second thing I say on Twitter when people ask, and sometimes they come here, is that please don't leave your job to do trading. And
Yeah.
to guys of my age, I say, please don't retire. You become so boring. I have basically out my IM group, IIT group, I don't much engage with retired, my classmates also, because they just become boring.
Yeah.
You think that I am financially independent, nonsensical thing. Because what will you do? Nobody's interested in you for 18 hours just because you have 18 hours. Even your wife is not interested. Your kids are not interested. Nobody is interested in you being around 16 hours in a day because you are financially independent. Nobody
Yeah.
wants to travel 12 months in a year. Nobody wants to go and play golf every day for... It is just the most boring thing that these guys imagine. And for the young guys who try to, because in 1 year they have made some money on trading and all, you will become boring. Who will you talk to every day? You do your work
Yeah.
and then give us the money. We will manage for you. And even if you don't want to give us, do it for 20 minutes in the evening. It doesn't... Even I'm sitting here 1.5 hours. It's not that every second I have to see the screen, what is happening.
Yeah.
Whatever is happening. So it is this thing illusion that, if I did it 8 hours, I will do any better. No. Nobody is making money like that.
Yeah, there's so many young people who are quitting their jobs to
They
just
will
get
always,
into full-time
basically,
trading.
they'll be ruining their lives. I can tell them in black and white. They can curse me on Twitter, but they are doing the wrong thing.
Yeah. And what's the one myth about wealth that frustrates you the most?
Oh, I don't... You think I'm worried about frustration? I'm enjoying my life. No, I don't even...
Or
I
what
don't
is your
understand.
relationship with wealth now at this stage of life?
So at this stage of life is that I don't care, but I care because so we say that we don't have to ask for anything personally about wealth from... We don't have to say to God, God, make me rich. I have to say, God, make my investors rich.
Amazing.
Everything else is automatic.
Yeah.
Everything else is automatic because in our business, it's very... And also my investor means I'm also an investor. But what I'm saying is, beyond the point, it is an ego trip that my performance is better than your performance. Beyond that, enough has been done. But as I said, it is the purest form. If I say, God, please make my hedge fund returns very good, I don't have to say to God that 15% I get as my performance fee. So there is no... It's now NAV is the game.
Yeah. Just find something you love and let it consume you.
Rest is automatic, particularly in our business. No, it's not true in every business. For example, if you're working in L&T, you can't say, make my cement the best cement. Actually, not, they don't even do cement, but whatever, you take. Because the guy will say, okay, I'll make your cement stronger, but you enjoy, you have nothing, no direct connection with that. In our game, it's very direct.
Yeah. What are you most proud of?
To have survived with sort of keeping the friends and family and everybody and investors happy. And as I said, our game is that even if an investor does not invest because we are long short and they like long only because they have not heard of long short in a emerging market, in the end we should say we analyze your return, they are lower than ours. Then we don't care.
Yeah.
Seriously, for us, it has become that we are enjoying what we are doing and we are doing it without doing any chotu, idhar ki baat, udhar, koi hame wo nahi hai. We have, for many years, as I said, not engaged with promoters, not engaged with brokers. We are doing it at an intellectual level. If you see these books here, which I read even in office time, here dekho.
Wow.
Fir ye dekho udhar.
Lovely. Wow.
This is my game.
What an amazing office.
This is only an office, and I have this thing like at home. And on a normal good day means my NAV should be okay, nobody is calling me. I read books in office also. Sometimes there be, oh, ये हो गया कोई हमारी कंपनी ने disappoint कर दिया फिर उसको ये घंटा study करो क्या हो गया kind of thing. But if it's a normal good day and you have 2 meetings, the rest of the time what do? I read books.
Yeah. And last and final question for today. What's the kindest thing that anyone's ever done for you?
Oh, many people have done. Too many people have done. At every level they have done. They have done from in the olden days. By the way, do you know that when I went to Wharton, I took a loan for an air ticket. So there are many, many things people have done. Then I had this case with SEBI. Many people helped me. I have had many things at every level they have helped. There are too many guys. At least if I count where I feel like emotional and I feel that I owe them a lot, there'll be at least 7, 8 people. And yes, and they also know that I totally appreciate over 30 years what they have done. Yes. So very many people have done. Mostly related to work.
Yeah.
Or, this education type. Because otherwise, that is where you ask or somebody gives you or whatever. Yeah, but otherwise, so that is where the kindness comes mostly at a bad time.
Thank you so much, Samir, for taking out the time today. Such a pleasure and honor to have hosted you. You were really present and authentic, and I really appreciate it.
Okay, thank you very much. Bye. And don't buy private equity.
Thank you.
Bye.